At the violence in Libya, the country's oil sector is approaching production levels not seen since before last year's revolution. Oil company executives that left last year have been slow to return, however, but oil demand has remained steady despite the slowdown in China, Europe, and the United States. Let's get some more on this and where the industry is heading. We're joined now by Feridun Fesharaki. He's the chairman of Fax Global Energy and a member, of course, of our GX20 panel of experts. Nice to have you back in the studio here in Abu Dhabi. I want to start on Libya and bring up a few facts here that most people probably don't know, and that is what Libya has in terms of proven oil reserves. If you go back to 1970, this country was actually producing about 3.5 million barrels a day, but it's been on a slide, as you know, ever since. 47 billion barrels of proven reserves, almost 3% of the world's total reserves right now, and production that would hit 1.6 but slid back down to 1.4 million barrels a day. How much is the chaos that Arwa Damon was talking about in her report affecting the ability to raise production right now because of security issues?
Well, there are problems of security, but also the terms in Libya are very tough. These are Gaddafi terms, which gives about 90–95% to the state and less than 10% to the investors. So if they really want to see more production, all of the laws need to be changed. They have kept very much all the Gaddafi rules, which are very harsh for the investment environment.
In speaking of the environment right now with regards to pricing, because Iran has seen its production fall off, there's this perception of a very tight market. Saudi Arabia and its oil minister Ali Al-Naimi again trying to talk this market down. They want oil for North Sea Brent and the basket of OPEC crude around $100 a barrel. Is there more oil available, or are they just talking a game to bring the price down in your view?
Well, for most times the Saudis need to say what they might do, and that will impact the market. They have made it clear that they want $100 to $105 price of oil, and I think that's what they will get eventually by talking it down. You don't have to produce the oil as long as you have the capability to produce it. The market will take your word very seriously.
So they did almost a $10 correction. Your view right now, as we stay in this range of $100 to $108 a barrel, do we creep higher?
I think we creep higher a few more dollars and then we come down. By the end of the year, I expect to see us in the $100, $105 range, which is exactly what the Saudis would like.
That's interesting. How does Sudan and South Sudan, in your view, play into this? It doesn't have a huge amount of reserves, 6.7 billion barrels. You can see less than 0.5% of proven reserves. The production around 450,000 barrels a day. But its clients are very important. They're emerging market clients that want their oil.
Well, first, South Sudan production can go up to 1 million barrels per day if the environment is right. So that has been forfeited because of the existing problems. The current customers, China and India, are very important and dependent customers for the quality of crude that they have. It is lighter crudes. It is low sulfur crude. The Japanese even buying it and burning it directly to compensate the loss of the nuclear power reactors that they have. So quite a few people like this kind of crude. Them being out of the market has quite a serious impact. It's very difficult oil to replace.
Okay, that's very interesting what you're talking about here. We have to bring up to the United States. This is something we've talked about, you and I, on the fringes of this. You read different reports about how much of a game changer this is. A couple of the facts that you provided us. In 5 years, the U.S. will not need to import Middle East oil. By 2020, the new production in the United States will be equal to Kuwait or right here in the United Arab Emirates. That's radical.
This is quite spectacular. These are the liquids which come from shale gas. We call it shale oil, but they're really liquids from shale gas revolution in the United States. The U.S. was supposed to be an importer of LNG, now it's becoming an exporter of LNG. And these volume increases are 200–300,000 barrels per day every year increasing. Substantial growth. And indeed, the U.S. will not need to import oil from the Middle East. It may still do, but will not need to do it. And could be exporting 3–4 million barrels per day by 2020, bigger than Kuwait and UAE.
Yeah, in fact, some were talking about the retooling of America as a result of the new oil and gas finds. When I mean the retooling, we're talking about adding aluminum plants, for example, aluminum plants, steel plants, things that have been shut down over the last 20 years because the U.S. didn't have the energy. Is it that big of a deal in your view?
It is the biggest deal we've seen in decades. Actually, petrochemicals is number one. The U.S. is likely to emerge equal or the second only to Saudi Arabia in petrochemical exports on the back of cheap gas. The Saudis charge themselves 75 cents a million BTU. The U.S., the prices are $2.50. in the market, people have to pay 3, 4 times, sometimes 5 times more than that to compete. So we have an opening of the energy-intensive industry in the U.S. and a competitiveness like we've never seen before. So amazing changes are in the offing.
The one thing I wanted to talk to you about is Iran before we finish here. Iraq has passed up Iran in July in terms of overall production. We saw its exports drop because of the EU and U.S. sanctions against insurance and the rest. Is Iran having a difficult time maintaining levels because people cannot invest in their oil sector, bar, say, the Chinese? And what happens going forward?
Well, there are 2 problems Iran faces. One is that there is a production decline because of lack of investment. One is an export problem because of sanctions and shipping insurance. The natural decline in Iran, about 100 to 200,000 barrels per day every year without the new investments. That we can see. But the problems of exports, very much related to sanctions and the loss of shipping insurance, it went down by 1.2 million barrels per day, but it's creeping back up. We expect the Iranian oil production and exports to rise 300,000 to 400,000 barrels per day by October as different countries institute their own shipping insurance to take care of the expired European shipping insurance.
So the political nature of this, China, South Korea, Japan cutting their imports from Iran, they're reducing them, but they're not cutting them out.
Well, the U.S. does not want them to cut it. The U.S. wants them to cut by 15 to 20%. And as long as they cut by 15 to 20%, they get recertified and they get the waivers and they can continue importing happily.
That's real politics, I guess.
Yes, indeed.
Nice to see you.
Thank you very much.
Ferdinand Fisharaki, once again, of FAXA Global Energy. Well, let's take a look at the markets. The only place trading today is in the Middle East, and they finished mostly lower as regional companies are poised to announce their latest earnings. The biggest sell-off today coming in Dubai with that drop of 0.75%. Abu Dhabi also lower, almost 0.2%. Doha trading down 1/3%, and the Cairo index trading down just fractionally. Third quarter earnings are going to be coming out, and that'll be affecting the markets in the week ahead. And from Abu Dhabi, the crossroads of East and West, that's it for the Global Exchange. I'm John Defteria. Stay with CNN. We have a special report.